doing some Euro USD analysis, and today we are on the weekly chart here zoomed out. Overall, as you can see, the trend for a long term on Euro USD is obviously bearish. Other words, down structure bearish. So I like to use higher time frames so I can just see the bigger picture, and in the small time frames just to trade more in the moment. So in the long term we're down, and I want to actually show you guys two things that I noticed here. So I noticed number one was we had a break of structure right here, and if you don't know what a break of structure is, that's basically when the trend reverses, when the structure that holds like if we go back on the weekly chart, we zoom out, the structure, which are the lines that I have here, are the actual lines that maintain this trend. So if the trend is bearish, these lines are the structure that you get it. It structures the whole downtrend, because if you notice, we have lower highs and lower lows, and that's down structure. That's forming a bearish down structure. And so it's the same thing here, but we just labeled it BOS. So here, the only difference is if I were to label this wouldn't be a break of structure. This would be a COS, continuation of structure. A BOS would be more of a reversal against the trend. So here, I'll show you guys where I'm pointing the arrow. We had a mini trend right here that was going upwards. So we had price come up like this, make higher highs and higher highs. What do we have here? When it came to here, we had price come and break through those previous structures, which were, bam, these two lows. And if you see what I'm talking about, it's right there. Price came and broke these previous two structures, showing you that price was changing. The structure was changing, because before we had equal highs, higher highs, higher lows, showing you that the short-term trend was bullish, and then we had a break of structure showing you that we have movement down to the downside. And if you noticed, after we had that break of structure with those blue lines, let's just take this away. Price came back and actually hit this POI, which in my group we use the term POI for points of interest, so areas of interest that we're interested in trading. So for us, we only take two types of setups, which we trade gaps and order blocks. That's the only two setups that we take to trade. And so right here, this would be the gap right here. Price came, tapped into that right there. As you can see, smart money came and tapped, left a wick right into that area before reversing downwards, and boom, when it came down here, a lot of people thought this was a support, right? Because support resistance, they would have said, oh, this is a support level, and they would have bought off of here, and then boom, yeah, they would have made a little profit, but then prices just come right down. This price just came right back down, and is now crashing through that support, which is the reason why I don't trade support and resistance. I actually use support resistance as my take profit. So this for me would be sell side liquidity. So right now, price is actually breaking through this previous double bottom that people were buying off of on the weekly chart, thinking it was going to go up for more than it was. And so now that price is breaking through, just like we explained here, I'll even draw it. Just like previously when we had here this break of structure. Sorry guys, this break of structure on Euro USD. Now that we saw on the weekly chart that price was coming down and breaking structure here, I'm waiting for price to come back down on a smaller time frame in order to hit the gap, because here we go. If we go on the 15-minute time frame, we see this giant black candle here to the left of your screen. That was created. That is called an imbalance gap. So a balanced market has healthy price action. So a balanced downtrend would be down, up, down, because that's how the market moves. It moves up, down, down, up, right? But when there's volatile news, sometimes the market doesn't have time to go back up and retrace. And so what happens is it goes straight down, and it will take a long time before going up. And so this is called an imbalance. And so now we have to wait for the market to come back into this level, which is the gap that it leaves behind, because it's literally a gap. And we trade off of those, because we only trade order blocks, imbalance gaps. And yeah, the same thing on NAS. NAS right now on the weekly time frame is bullish, but it looks like it's about to crash down. I don't know yet. It could just be tapping into that low here, because I have bullish market structure. It could just be tapping into this low, But if it breaks for some reason, if it breaks this low, I'm going to be looking for sell positions because I don't see any demand on the 15-minute yet. On the smaller time frames, I just see a lot of selling volume and a lot of bearish structure. You just see a bearish downtrend. I don't see any demand yet. But until I see demand, I'm not looking to buy yet. And yeah, guys, that's pretty much it. We only trade these gaps in order blocks. Order blocks are basically the opposite. They're not the opposite, but they're just slightly different. They're basically where large sums of money are entered into the market, where smart money enters large positions of orders. So that's why they're called order blocks, because they're blocks. They're visually on the screen blocks that are filled with large sums of capital that create a large movement in the market. Like you see right here, right there, that's an order block. It's not the most perfect example. That's an order block too. And these blocks are where large sums of money were. And then after you see the open of these blocks, you just see a bunch of movement afterwards. And so we trade these and gaps, and that's pretty much it. But yeah, guys, I hope you guys found value out of this video. Peace.